You're tuned into the It's Real podcast with your hosts, Kayla, Kallander, and Andrew Yaggie. Each week, we'll talk about what happens behind the scenes working full-time in real estate and share with you real-life stories, our successes and failures as we work to help consumers and industry professionals reach their real estate and real-life goals. Here we go. It's episode 35 of the It's Real podcast. I'm Andrew Yaggie, and I'm a real estate agent.
I'm Kayla Kallander, and I'm a mortgage lender.
Kayla, how are you this week?
Fabulous. It's a day of the week that I really love. I don't know when this will air, but it's a day that I really love. So I'm super excited for the day to come. And I think it's a little odd, this weather that we're having, this spring weather in February. It's interesting, but it makes me nervous. We're going to have a May blizzard. It really does.
Right. I know. We were just talking about it, my wife and I, and she said, "Oh, just wait. Winter will come. There will be something." And I don't know. I was looking at some of John Wheeler from WDAY, some of his information on, just kind of some of his thoughts and just how, temperatures probably will go back to more of the average, be a little bit cooler, but it looks to be drier, based on an El Nino cycle. So probably not a lot of snow, but I guess it's a chance at any time. It's even crazy, Kayla. I was out showing a lake property earlier this week, and just actually kind of eerie watching people out on the ice. And I was out flying yesterday, and I mean, most everybody was off. I was down to Iowa and back, and I didn't, with the exception of something close to shore, didn't see anybody out on the ice, which is too bad. But I guess, hey, I'm enjoying the nice weather too. And actually, I think it's giving the housing market a jump start because, it's felt like January or it's felt like March, right?
It does, yeah. I think a lot of people, when you live in a place where it's winter all the time, it's rare you see people out walking their dogs and running. It's just, once it warms up, you see people come out and about. And I think the same is with real estate. When it's nice out, you want to go look at homes. You want to, get out of your house instead of hibernate. So I'm already seeing people like getting out and seeing more homes, even though there's not as much inventory at the moment. That spring fever pushes them to get out and go look. So yay warm weather.
Yep. Homes are coming. I mean, I'm having more and more conversations. I mean, every day I'm having multiple conversations about people who are ready to sell and, and starting to work with some more serious buyers who are ready to go and who are kind of beating the rush a little bit, which is nice to see a little bit less competition. But we've loved the nice weather. I was down, Ella, who's my oldest, who's in kindergarten. They went to outdoor ski area yesterday, not Crossfire Mountain of Walhalla, which I still can't believe you've never been to since it's your hometown, Kayla.
Very shielded as a child.
Apparently so, but yeah, we went by Alexandria to a spot there and went tubing with her class and yesterday, and it was just gorgeous. I mean, people were in t-shirts and it was just such a wonderful day to be outside, and it just you forget how some vitamin D and some sunlight really is important.
I know. I was thinking about that too when we were at the lake. It's just like you could feel like your black jacket get warm, or like your head get warm. You're like, oh, I've not felt this in a while. So it just revives you. You know what I mean? So
absolutely.
I hope it continues on. We'll see, I guess. We'll see if John Wheeler's right.
We will see. It was also very interesting. I'm thinking like last week, Thursday, one of the negatives of warm weather and there being snow on the ground, of course, is perpetual fog. And to cite John Wheeler, he had stated that like last Thursday, there were like 1,570 weather stations across the U.S. that were reporting dense fog, which set a record as well, which was kind of crazy as well.
That's crazy. Were you a meteorologist in another life, Andrew? Because I feel like you could have been.
I was not a meteorologist, but I did do a stint in radio, so did read a little weather once in a while. And being in aviation as well, weather is very, very important. In fact, I was supposed to take a flight last Thursday that we ended up having to scrap because the minimums were too low. And worst case, if we had to find an alternate, we would have had to have been in. Fly southwest a ways to like the western tip of Nebraska to find an airport to potentially get. So, it's kind of strange.
It is important, but Well, all I know is that this warm weather can stick around and people will get ahead of the rush of even the busier spring to come of real estate. So,
Absolutely. Kayla, I saw that the Fed met just the other day. Did you catch that?
yeah, gosh, it's all over the place, right? Everyone knew they were meeting, and to no surprise, they've said they're going to halt rates, which is great. We had seen, was it 22 rate hikes in the last, since our last they last met and didn't raise rates. And so for people that are thinking about buying, even since they've met, when we heard they were going to meet or the Fed was going to stop, I saw such an influx of applications come in. And so with this news, there's hope that, hey, we won't see this pressure of rates and people have that in the back of their head, like I'm going to get in the house and then rates are going to go up. Where now it's almost just peace in their hearts of, okay, I know that this, if Kayla's approving me and this is the rate today, I have hope that we shouldn't see too much of an increase. Now, obviously, interest rates are moving a little bit differently, mortgage rates than with the Fed, but people have just kind of had this sense of reassurance I've felt in the last few weeks, especially since the Fed met. Have you been feeling that too? I mean, you hear the noise, the hustle and bustle of this all, job reports, et cetera. Are you finding even sellers maybe considering getting out of their 3% rate because that margin's a little bit different? I mean, what are you seeing?
Yeah, well, I think a lot of people have been waiting for the news. And I mean, just to reiterate some of the high points, the Fed did say that, hey, I don't think anyone really expected, any rate increase, but I think there have been some people sitting on the sideline just waiting for a rate
Yes.
cut. And I think the Fed, just kind of reiterated that, hey, we're not cutting rates right now. And in fact, rate cuts aren't imminent, meaning they're not going to happen today or tomorrow. There's been talk of a March rate cut. It sounds like that probably isn't going to happen. They expect a lot of economists, it says they expect rate cuts to occur in May or June. And the Chairman Powell also said that, that the Fed hasn't pulled off an elusive soft landing.
Mhm.
Um, they haven't declared it yet. I mean, a lot of people are saying, hey, we've probably, avoided a huge recession. They're not ready to say that yet.
Mhm.
And again, just because rate cuts are coming or maybe alluded to in May or June, lower mortgage rates won't automatically come, but they should over
Mhm.
time. So, I mean, so
Yeah.
that's really good to see. And in fact, Kayla, I think I was just looking at the North Dakota housing numbers.
Yeah.
And man, some of those numbers they're getting pretty low. Did I see a 4?
You did see a 4. North Dakota housing is, for anyone in North Dakota, obviously, purchasing, not refinancing. There's so many options here. So many different. I mean, you see first home. There's 4 options just for that first one. So with these products, you have to be at certain income caps. So if you're making 200 grand a year, you're going to be in one option. If you're making under 56,000, you're going to be in another. So it's important to know that these rates are not for everybody, but they are customized to the person and what they make per year. And so I tell people that we have this program. This has actually been really competitive, and I've locked so many North Dakota housing options. So, to everyone listening, North Dakota offers you options for no assistance and a little bit lower rate. You'll see start on a couple of these. That's if you get assistance. If you're a repeat buyer, you fall into the roots category. That's down at the bottom. So a lot of movement downward for these rates. So if anyone is interested in knowing if you qualify, make sure you meet with a lender because we need to examine your income first and foremost and make sure we say, does it make sense to get assistance or not? Because if you take a lower rate for no assistance, that might save you, well, it will save you thousands. So some really good news with North Dakota housing. And I think that's pushed people to say, I want to see if I qualify. So don't just guess. Take the time and meet with the lender to see if we can get you one of those lower rates.
Sure. And what about rates in general, Kayla? Where have things kind of hovered?
Yeah, so thank you for pulling this up. So up just a smidge today. Yesterday we saw them dip, and that was to be expected after the meeting. But 6.92. Now that's not to say that's what your lender is going to be at. I will tell you, Andy, I was locking yesterday some individuals in the lower sixes. This also doesn't take into account, you saw conventional there, but FHA is going to be lower. I was locking in the fives yesterday. I knew that rates were probably going to come up today, so I locked in 4 people yesterday because I knew let's get this done, and 3 of the 4 were in the 5s. How cool is that? Like, and
That's
it's
really
funny
cool.
because people were so upset about 4s and 5s at one point, and now it's like, now that you've experienced higher, this feels really good. And what's really cool is individuals are getting ahead of it. They're saying, you know what, if rates come down, cool, awesome, great. But I'm going to get this house today and maybe a seller concession. And if I can refinance at a lower rate later, I will. You can always renegotiate the rate. You can't always renegotiate the price you pay for the home.
Mm-hmm. Yep,
So
absolutely.
some good movement. And I would just advise people looking at those rates, know that that's not the only rate for the product. You can always buy down the rate and your lender will talk to you about that.
For sure. And hopefully that lender is you, Kayla.
Hopefully, all 50 states.
All 50 states. How many states have you offered a mortgage in?
I mean, I have financed probably, I don't know, 15 to 20. I
Okay.
mean, I do a lot. There's Nebraska. I do a lot kind of in like Oklahoma, Texas, Florida, because a lot of people up here get really cold and they want to buy second homes in Florida or Arizona. Got some in Cali. So it just depends. I did one in New York, a condo in New York a little over a year ago. So it just kind of depends on the people. Or if I have a really good experience with a realtor in Colorado, they'll send me their client. You know what I mean? It just kind of
Yeah.
snowballs. So it's
Oh,
fun.
relationships. That's
Yeah.
so important.
Well, and now it's like you don't have to be in front of people to give a good experience. We can FaceTime, you can Zoom, and you're still going to get the quality. And I think that for a while that was lost. People were like, shop local, only talk to local lenders.
Mhm.
What's cool is we can still give the same great experience. So
Right. I love it.
yeah,
I think you should have a map hanging in your office and put a pin every
I'm
time.
gonna do
Exactly.
that. I'm
I
gonna
think
do
it'd be
that.
cool. It'd be cool to kind of look back and see and have a goal of lending in all 50 states.
Yeah, right. And then I should go to every state for the closing, like Hawaii or Utah. I should really make sure I get to those closings.
For sure. That would be nice. And hey, Kayla, it's for business. You can deduct it too.
Yeah, right. Well, that's debatable, but yes.
As long as you're working more than 50% of the time, which
Right, exactly, exactly.
you could find some work. Kayla, I saw, got to jump back just a little bit before we dive, too deep into our discussion today, but
Yeah.
I saw something pretty exciting on social media the other day.
You did? Do tell.
I did. So there's somebody who I know is now booking and doing corporate social media strategist work, keynote speaking, group and individual training in person and
Yeah,
virtual. That's really
yeah,
awesome,
yeah.
Kayla.
Thanks, man. Like we just talked about, we're able to reach the masses with technology now and have relationships and have virtual hugs and virtual handshakes now. I get to know, like Andy, you and I, we don't meet in person that much, but technology has been able to develop our relationship further, podcast, etc. And so what I've done is I've had a lot of success in my business as a lender. So now, I've got a lot of requests for people for just help, not necessarily doing it for them, but strategizing, figuring out how to get your message across. Who's your audience? What should you talk about? So many people are concerned about what do I post? Like, what should I post today? And it's like, let's back up. Let's talk about you and who you are as a person and a brand. So also had some opportunities to speak. And so now I'm like, maybe I can do more and impact more people by actually making it official. So
I think that's really awesome. I'm excited to see where it takes you. And in fact, I might need to hire you for your services because I could use a little better strategy. And I look at video. I mean, obviously, you do a great job with social media, especially with short form video. Um, excuse me, and that's been really, really fun to see. I've done more longer form property videos. Of course, we're shooting this, which actually between those two things alone
yeah,
have attracted a number of people to my business. And I go places frequently, and I'm sure you do too, where people recognize you. And same thing here. Oh, people say you're that guy.
yeah,
I see you all over social media, and so that's awesome that we're able to offer things like that to our clients.
yeah.
And just kind of work on that attraction piece. And I'm excited that you're willing to share some of your knowledge with other people.
Always. And it's all about just connections and engagement and finding ways for, like you just said, that familiarity bias. When someone sees you, you might not know who they are, but they know who you are already without even having to sit down and have coffee. They already know who Andrew Yaggie is. So
Mhm.
it allows you to create trust without really having to, one to many versus one to one. So
Right.
yeah.
I love it. Well, keep us posted because I think everyone out there is going to be really curious, to see how your journey with that goes. I know I will, and so good for you.
I'll keep you posted. Promise.
Awesome. Well, Kayla, today I want to talk a little bit about
Mhm.
an article that I came across, and we talk a lot, of course, about buying and selling homes, and the importance of having your ducks in a row. But I
Yeah.
came upon this article that talks
Mhm.
about the fact that it's harder to get a mortgage, and these tips can help. And Kayla, the premise behind it is that mortgage lenders haven't been this selective about who they've been lending to in the last 12 years.
Mhm.
So, a lot of people, of course, are coming to buy a house and they don't know where to start. So, like we always talk, people are like, well, just show me a house. Show me a house. I want to see it. Whereas, we talk a lot about the fact that, hey, go sit down, go find a lender and see what type of products do I qualify for?
Yeah.
What does my credit rating look like? What's my debt to income ratio? Um, and and so looking, I guess I can understand why lenders are maybe getting a little bit more selective. But what shocked me is it's not for the reasons I would have thought, Kayla. This
Mhm.
article talks a lot and goes into depth, which I want to hone in on.
Yeah.
The reason for the tightening in standard is twofold. One, more mortgage companies are leaving the market or merging, resulting in fewer loans being offered, and additionally, declining investor demand for certain mortgage types mean that lenders can't easily sell off these loans. After closing, it means the lenders may need to hold on to loans longer. So to reduce their risk, they choose only the borrowers who are most likely to make their payments. What do
Mhm.
you think about that?
With what's happened in our industry in the last, year and a half, 2 years, a lot of mortgage companies closed their doors. A lot of lenders have left the business, just like realtors. And so when you think about these individuals merging or getting out of the business, you also have to think about those that are in the business and trying to keep their head above water. And so, what I got out of this article, and then thinking about myself as a lender and everyone else that I know, I have many friends that are lenders working for all different companies. At some point, you might be making more money on a certain loan product, or if you have a specialty product, maybe you can't offer that anymore because a lot of lenders will bundle and sell. And so if you don't have a lot of, let's just say, bank statement loan types or jumbos, it's harder to sell. And so the way that I read this is lot of mortgage companies aren't able to be as profitable, so they have to be a little bit more exclusive about their product offerings.
Mhm.
I know that, we talk about North Dakota housing. Not every company offers it because you have to have so much money in. You have to ensure that the way that you originate and underwrite, you have certain underwriters, et cetera. So there's a cost to do that. So when you're pulling back products and you're not allowing individuals to qualify for them anymore, that is clearly a reason why we're not seeing, or well, we are seeing it harder to get qualified, or because the product's not there that maybe you could have, had prior. I also think that COVID really changed things. COVID has had people, 2020, 21 going off and becoming entrepreneurs, switching jobs, working remote. And so when we look at, individuals who quit their jobs or moved roles in the last few years, they might not have a history of, say, commission or a history of bonus or overtime because they switched careers or jobs or titles. And so we're not able to use as much income as we once were. And then on top of it, Andy, not to go completely down the rabbit hole, but look at inflation and look at the cost of everything.
Yeah,
Insurance alone is so much more. I always talk about Halo Top. I don't know why. You know the Halo Top ice cream?
I
I
do.
swear to God, it was $4 and some cents at Hornbacher's, and now it's $8, which, you think about these little things that add up.
And you're
And
probably getting an ounce and a half less too because they've shrunk the packaging.
Probably, but you think of how all these things add up. And so obviously people are going to have more credit card debt or more debt in general. And so that offsets the debt to income. So I think those three things combined is definitely something that we are seeing as is kind of a ripple effect. And
Mhm.
people are truly not being able to get qualified like they once were.
Yeah. When I saw this article right away, Kayla, I first thought, I started,
I'm having trouble connecting to the internet.
hang on, I've
Take a
got
look at the help
Alexa,
section
who's,
of the Alexa app.
Alexa's got a little problem with this topic.
so let me tell you, so I'm working on automating my video studio a little bit more so I can say, hey, Alexa, turn on the studio
Oh,
lighting.
yeah.
And so I found an old Echo Dot because we're kind of a Google house with everything that we've got. And I've had this
Right.
Echo Dot plugged in, but not quite programmed. So anyway,
I love it.
Kayla, technical difficulties that we normally don't face.
Always doing something more, Andrew. You're always
Right.
innovating.
So Kayla, when I first looked at this article, the thing that I thought about as I was reading it and just talking about getting, lenders getting out of the business and things tightening up and, difficulties, in selling that, call it a risk pool, those
Yep.
loans.
Yep.
I thought immediately of, the insurance industry where, all of a sudden there are insurers that are totally getting out of markets because they've just been decimated. And I think we've talked before, like all of my personal investment properties, everything I have, the carrier I've used who's been great. And I had like one claim from a tree falling on something that was maybe, $4,000. And that's the only claim I've had in since as long as I've had insurance, but they're totally canceling everything because they're getting out of the market. And so so that was kind of the first parallel that I drew that, oh, of course, there would be a lot of these things are gonna hit multiple markets. And I would guess, I haven't heard any lenders right around my immediate area talk about difficulties. I don't know the difficulties you've had. It's maybe more of a backroom issue than on the front end. I don't know. Are you seeing a lot of problems or?
I don't see a lot around here. I think it's more at the bigger nationals. I mean, look at Wells Fargo. Look what happened to them. I mean,
Totally got out except for really high-end customers.
yeah, and even locally, I know there were some people that worked at Wells Fargo in the private banking, private mortgage section, and that it's done. And so you think about these larger companies that just can't stay afloat. So I'm seeing it more on like a larger national level or really small mortgage company that just couldn't keep afloat. I'm not seeing it a ton in Fargo, but I do know I could probably name 5 to 10 lenders I know locally that got out of the business, but their companies are still thriving. So
Sure. And no doubt, again, challenges and, maybe a slower trickle in the area. But, regardless, just talking about that, we all know that things are tightening up between lenders, even underwriters, right, Kayla? I mean, it seems that, in the COVID era and beyond, especially when there's a lesser workload, it seems that underwriters sometimes are a little bit pickier. I know I've run into conditions and things that, even the mortgage originator has said, hey, I haven't seen this and this wouldn't be a normal thing if not for, things just tightening up a little bit or being quiet.
Yeah, and I think too, I think people got burned in the past. They were so, willing to, oh, okay, that's fine. But now we need to document everything. Even I was talking to a client last week. We have to document maybe you know this, Andy, we have to document large deposits that are not payroll deposits. If they're over, truthfully, the kind of the guideline is 50% of your monthly income. So if you make 10 grand a month gross, if you have a $5,001 deposit or $5,000 deposit, we need to know where it came from if it's not payroll. And so people are so confused, but it's required. We want to make sure, do you have another job? Are you getting a gift that we didn't know about from an ineligible donor? Are you selling things illegally? Like, we need to document this because in the past we didn't, and look what happened. So there's a lot of things people just don't realize is involved. And so then they get to the mortgage process. That's where someone like me, I'm kind of your gatekeeper. I want to say, okay, I see this. We need to document this. So before this gets to underwriting, let's make sure we know. So a lot of kind of things you wouldn't imagine, but just because people have gotten burned in the past too, we need to.
Well, and no doubt as time goes on, and I have seen it with a few lenders where things have gotten trickier. No, we can't lend to this person, whereas, somebody else might be able to. But I think, a couple of things or 3 points kind of at the end of this article, Kayla, that I think are just good advice for everyone. And, maybe a way if you are running into trouble getting pre-approved is, number one, getting your debt to income ratio down to 28%. Kayla, talk about the debt to income ratio a little bit and why that's so important, when someone's, looking to get a mortgage.
Debt to income ratio is pretty simple, but a lot of individuals don't know what it means. It's your monthly debt divided by your monthly income.
That's
And
pretty simple.
yeah, but what is monthly debt? Is that my Verizon wireless bill? Is it my daycare bill? Is it my rent? No, it's anything you traditionally have a loan on. So think about your credit card minimum payments, your boat loan, your auto loan, your current mortgage, things like that. We take those monthly obligations, add them together, and we divide that by your monthly income. And so when we try to figure out what you can afford, we have to calculate that new payment in there. We need to calculate, okay, what can you afford to keep it under? So traditionally, Andy, conventional, you can't go above 50% normally. Now,
Sure.
this is not just a guideline. It's based on, what do you have for assets, reserves? What's your credit score? A ton of different things. Is it an investment purchase? Is it a second home? But traditionally about 50%. And so FHA, traditionally 56%. And VA, it depends. I've seen some get approved in the 70s, but that's just kind of a whole different ballgame with VA. But we're seeing individuals purchase properties and they're at 50%, 49.9. It's rare to see someone in the 28%, but I'll tell you what, I've got a lot of clients actually right now that are, 20% debt to income. And they'll ask me, they'll say, should I be buying this home? Do I have room? And I'm like, you've got lots of room according to guidelines, what I can do, but what are you comfortable with?
Sure.
What are you comfortable with? So we're seeing higher debt to incomes, but that's where it's important that you get an application in so your lender can see what are your monthly obligations. So we know what to qualify you for a purchase.
Another thing this article talks about, Kayla, is exploring a range of loan types and lenders. And, it's not uncommon. I think out here, of course, I can't use North Dakota housing generally. I do some in North Dakota, but very few. But, oftentimes, lenders, especially for a first-time buyer or depending on circumstances, looking at those USDA, rural redevelopment, FHA, a VA loan for a veteran, and even looking at conventional, hey, what are the different options that we have? So it's good to look at a bunch of different loan types.
Oh, yeah.
But, what about the lender piece as well, Kayla? What's your take on this point?
I think it's important that you meet with a lender that puts you in a program that they explain. So if I've got a client that maybe could go FHA or conventional, we're going to tell them the reasons why. I would hate for a client, and I hate when I hear this, Andy, you probably maybe do too, but I'm approved FHA, but I don't know why. Like, why couldn't I go conventional? And as someone like you who's writing an offer, it can be important to know what loan type we're doing when you write the purchase agreement, when you're, competing against other offers, which, program is stronger. So I think it's important that you know why you're in your program. You know what your options are otherwise. The other day I told a client, listen, you qualify for this and this. I recommend we do this because otherwise you're going to have higher payments and higher mortgage insurance if we do that. So that's why I think we need to go this route. How do you feel about that? And show the numbers. And they said, yes, let's go forward. So knowing the options you have and knowing why you're not in the other options. VA is pretty simple. You'd be a veteran, and USDA needs to be rural property. So it's not often we have to explain those two, but even getting into the details of how much down, 3% down, 5%, 20, knowing, and as a realtor, you want to know, Andy, so when you write that purchase agreement, if it's going to be strong or if you have to go a different route, So
Awesome.
that's pretty much is just know your options and ask the questions if your lender's not explaining.
Sure. And a final point, Kayla, which is pretty self-explanatory, take your credit score to new heights. So increasing your credit score is another great strategy. Of course, a perfect score being 850 and, so just really working on paying down debt and getting that credit score up. Do you really see a big change, Kayla? Talk a little bit about your experience as a lender with credit scores and how much of a difference does it really make?
It can be a really big deal in terms of, where if you've got a 620 or you have an 800, people probably don't realize how big of a difference that makes with interest rate. You know what I mean? So when you're shopping around and you haven't applied with a lender and you're saying, hey, what's your rate today, lender? Without knowing your debt to income and your credit score. I mean, look at those North Dakota housing rates we showed. What a difference, 475 to the sevens. So it's important people know, but it can truly make a difference. I had a client yesterday that was approved, credit expired. We repulled and they are no longer approved because they had some collections, and that their score went from 650 to 590. And based on their situation, we couldn't do anything. They needed to pay those collections off. So it can make or break you. And so it's important to keep an eye on that, whether you have a credit, monitoring device, or a lot of people have them through their credit card companies, but know at least a little bit about your scores because it can be a game changer for sure.
Credit monitoring device, that kind of sounds like an ankle bracelet or something.
Well, for some it should be.
Well, really great, Kayla. I think that's been, kind of a good summary, talking a little bit again about how it's harder to get a mortgage and, following those tips. And again, aligning yourself with the right people, connecting with a lender, like you say, that's going to explain things to you, that's going to take the time to educate and give you the time that you need and deserve is first and foremost, followed by having a good financial plan in place and taking care of your finances at home are really key when you're starting to buy a home.
Absolutely. And if you follow those steps and have the right, like I always say, team on your bench, you're going to be set up for success, whether it's now or 6 months from now. That's what we're here for. We're not here to just, take orders. We're here to help people and advise them.
Awesome. Well, Kayla, great connecting as always. I hope you have a great rest of the week and looking forward to connecting next time.
Always a pleasure, Andrew.
See ya.
Bye.